Welcome to Talk Tickers. We cut through the earnings call jargon to get you the key insights fast. Today we're diving into RPC Inc., looking at their first quarter and a pretty major acquisition they just made. We'll break down what you need to know.
Right. So looking at Q1, RPC reported revenue of $333 million. That's actually down just a touch, about 1% from the last quarter.
Okay, a slight dip there.
Yeah, but the more interesting story might be the EBITDA. That actually went up, climbed to nearly $49.5 million from about $46.1 million.
Oh, okay. So profits looking better even with slightly lower revenue?
Exactly. It boosted their EBITDA margin up to 14.7%. That's a full percentage point gain, 100 basis points.
A nice improvement on the margin front. And earnings per share?
That held steady, came in at 6 cents, just like the prior quarter.
Stable EPS. Got it.
And the big news, of course, happened just after the quarter ended in early April. They bought Pental Completions, big price tag, $245 million.
$245 million. Wow. Okay, we'll definitely dig into that. And financially, how are they sitting overall?
Still looking very solid. They've got $327 million in cash. And importantly, still no debt.
Strong balance sheet then. Okay, so let's maybe dig a bit deeper into how the different parts of the business performed in Q1. Pressure pumping.
Yeah, so pressure pumping revenue, that was basically flat compared to Q4, but the non-pressure pumping side saw a small dip, down about 1%.
Okay.
Management talked about strategically balancing price and, how much they're using their equipment, really focusing on making sure the work they do take is profitable.
Makes sense. Not just chasing revenue.
Right. And they noted their sort of newer gear, the Tier 4 DGB Frac assets, those saw better utilization, especially with dedicated customers. But the older stuff, the Tier 2 diesel equipment, well, that faced some demand challenges.
So a bit of a split picture within pressure pumping itself, depending on the equipment type. What about the wider frac market? What are they seeing out there?
This was interesting. They mentioned observing some smaller competitors maybe struggling a bit, seeing equipment potentially coming up for sale.
Signs of stress.
Could be. And that, could eventually lead to a tightening of frac supply down the road, maybe firmer pricing if that happens.
Okay. So are they planning to jump in and add more frac fleets themselves?
Actually, no. They explicitly said their current plans don't include investing in new frac fleets.
Huh. So they see potential tightening, but they're holding back on investment, maybe waiting it out.
Seems like it. Maybe discipline, maybe waiting for a clearer signal or better opportunities. Ties back to that focus on profitability, perhaps.
Right, not chasing capacity. Okay, what about the other side? Non-pressure pumping. You said that dipped slightly.
Yeah, just 1%. Within that, downhole tools revenue was pretty much flat. They saw some growth in certain areas, but weather issues in other places offset that.
Always something, isn't it?
Yeah. They did mention some newer drill and unplug products are getting some traction, but it's still a small piece of the pie overall.
Okay. Anything positive there?
Yeah, actually, rental tools did well. Revenue there is up 7%. And they did reiterate that they want to grow these service lines that aren't quite so capital intensive.
Right. Shift towards potentially steadier, less investment-heavy businesses.
Yeah.
Which I guess brings us back to that big acquisition, Pental Completions.
Exactly. $245 million for a wireline perforation company. That's, punching holes in the well so oil and gas can flow.
And focused only on the Permian, right?
Yeah.
With big clients.
That's the profile. Exclusively Permian, focused on those blue chip E&P companies. So a very specific bet.
Okay, tell us about Pentel itself. What kind of business did RPC just buy, financially speaking?
Well, Pentel did really well in 2024, pulled in $409 million in revenue.
Wow, that's a sizable chunk.
It is, and with good margins too, EBITDA margins around 20%. If you look quarterly, their revenue was pretty consistently around the $100 million mark.
Solid, consistent performer then. And RPC expects this to help their bottom line.
Yeah, they expect it to be accretive, meaning boost earnings per share and cash flow starting in 2025. They're budgeting maybe up to $20 million a year in CapEx for the Pental business.
Okay, so good revenue, good margins, adds to the bottom line. What's the strategic thinking here? Why this deal? Why now?
It seems to tick several boxes for RPC. First, improve overall margins, given Pentel's higher profitability. Second, massively increase their scale in wireline services. I mean, they go from wireline being like 1% of their revenue mix to about 23% based on 2024 numbers, pro forma.
That's a huge shift.
Huge. Yeah. Third, it helps rebalance the portfolio towards businesses that tend to generate more cash flow. And fourth, it strengthens their customer list, adding more of those big established E&Ps.
And concentrates them even more in the Permian, right?
Definitely. Pro forma, something like 60% 40% of their total revenue will now come from the Permian.
So a major strategic reshaping. Okay, let's touch on some of their financial details from the quarter. Costs, cash flow.
Sure, their cost of revenues actually went down. They cited lower transport and fuel costs, less spent on materials and supplies, and also insurance costs getting back to normal.
Good cost control there.
On the other hand, SG&A selling, general and administrative costs ticked up a bit, mainly due to spending on a big IT modernization project they're doing.
Investing in efficiency, presumably. Tax rate.
That went up to what they consider a more typical level, 27.2%.
Okay, and cash generation.
Operating cash flow was about $39.9 million. After spending $32.3 million on CapEx, their free cash flow was $7.6 million. They also paid out $8.7 million in dividends.
So generating some free cash, paying dividends. What's the outlook for spending this year, especially with Pental now in the mix?
Their CapEx guidance for 2025 is now higher, obviously. It's in the range of $165 million to $215 million, and that includes Pental for 9 months of the year.
Okay. Now, management seemed a bit cautious about the bigger picture, the macro environment.
Yeah, they definitely flagged that. Used phrases like high uncertainty and limited visibility, specifically mentioning worries about potential tariffs, inflation, and what that could do to the economy.
How might that impact them?
Well, potential for higher equipment costs, for one. And also, it could put pressure on the industry's capital spending discipline, maybe make companies hesitant. They also noted that if oil prices dip down into the $60, that could be a headwind for some customers' completion plans.
So keeping a wary eye on the horizon. Understandable. Anything else noteworthy? There was something about share registration and board changes.
Right, pretty standard stuff, it seems. They filed an S-3 registration for shares held by the Rollins Family Control Group, described as just good corporate housekeeping.
Okay.
And board changes. Steve Lewis joined the board. Gary and Pam Rollins retired. Seems like routine governance updates.
Got it. So pulling this all together then, what are the kind of key things for someone following RPC to keep in mind from this report and the acquisition?
I'd say first, Q1 showed stability, maybe even strength with that margin improvement despite the slight revenue dip. Second, that Pental acquisition is a really significant strategic shift. Much bigger focus on wireline, much bigger focus on the Permian. That could really change their growth and margin profile.
But it also comes with risks, like more Permian concentration.
True. Third, you have management's caution about the macro picture tariffs, inflation, oil prices. That's definitely something to watch. Fourth, those comments about the frac market possibly consolidating are interesting. Could be an opportunity or a challenge down the line.
Right.
And finally, this overall move towards less capital-intensive services, shown by both the Pental deal and their focus on growing things like rental tools, signals a strategy potentially aimed at generating stronger, more consistent free cash flow.
Okay, that's a great summary. Now, let's shift gears to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on all this. What have you got?
All right, so think about the Pental deal, high-margin wireline in the Permian, and combine that with the potential shakeout in the pressure pumping market where RPC is being disciplined. Here's an idea.
Okay.
Consider going long RPC, buying their stock, but pairing that with a short position, betting against a company that's mostly just a pressure pumper, especially one maybe with older equipment or a weaker balance sheet.
Long RPC, short a pure play pumper. Okay, walk me through the thinking there.
Yeah.
Why is that plausible, even if a bit outrageous?
Well, the logic is RPC is actively diversifying away from pure pressure pumping dependence and into a higher margin, potentially more stable service line, with Pental doubling down on the Permian's activity.
Right.
At the same time, if that pressure pumping market does tighten up, as RPC seems to think it might, the companies that are solely reliant on that, particularly those maybe struggling with older gear or debt, could really feel the squeeze on pricing and profits.
So you're betting on RPC's strategic shift and diversification paying off, while also betting that the potential consolidation in the frac market hurts the weaker pure play competitors.
Exactly. It's trying to play RPC's move towards what they hope is a more resilient business mix against the potential vulnerability of others in a specific segment that might be facing headwinds, capturing that divergence.
Interesting. Definitely gets you thinking about the different trajectories within the oil field services space.
Yeah.
Okay, that is a thought-provoking idea to chew on. And that wraps up our deep dive into RPC's latest quarter and that big Pental acquisition. We've tried to pull out the key info and what it might mean going forward. What are your thoughts? Do you like the big bet on Permian wireline? How do you see that frac market playing out? Let us know what you think. This has been Talk Tickers. Just a reminder, everything here is for informational purposes only, definitely not financial advice. We'll catch you next time for another earnings call breakdown.